All right, guys. You're all welcome to today's live section, where we're going to be looking at our price action, um, trade focus, review of our previous trades, and getting to see what the market has to offer us this week as we are in. So, like you have seen, we still have our markups, available of the previous last session. And so we're just going to review and see what price action has performed. And you can know, last week we took a couple of trades on the play that we analyzed and forecast. We waited on those opportunities to come, and then we took those trades, and it were all profitable. That was an amazing week for us. So greatly, let's get to start. So give me a minute, guys, while we allow other people to join us. We'll scale through this today together. Thank you. All right, so welcome El Madi, welcome Kelde Goodness, and Cartoon if you're on, so you're welcome. Now, starting from where we stopped last week, this was our first pay, Europe GBP, where we did the analysis. And I can clearly remember that I told you guys that this pay is going to be bearish. And before we get to a point where we're forecasting the bearish market, we had already, I think that week we were here. This price action was not here. Let me try to circle that. Okay, so this price action was not here. This price action was not here. And we were between this bullish move and this bearish move. And I clearly said that the moment we have this price action here, look at where the market came from. Let me show you. So this market was bullish. Okay, so 1 minute. Let me drop this to. All right. So this market was bullish. We had a very clear bullish market here from this breakout. We can see the impulsive move, and all of this were considered impulsive move. We had a little bit of correction here. We tap into this high, and as at then we had this sell. I can remember telling you guys that that sell is gonna be, we're gonna have this sell to be a retracement and have this continuation to take out higher time frame highs. That was still very significant for us. That was not being taken out. So this was it for us. All of these highs, So now that we get into this area and we give a very sell off. Now look at what happened here. If you already been coming to our life, you will understand what I'm talking about. We had already. I'm doing a review right now. What we previously, forecast before now, and why we are here is what I'm talking about right now. How do we get to this particular price action, and what advantage do we take, right? So when we get here and we have this sell-off, remember on our last session, you can go and check the video. I said that we have a very clear double bottom right here. And this clear double bottom right here, yes, the market is going to react and buy up. And for the market to react and buy up, you're just going to buy maybe 50% of between here and this here. If you put your Fibonacci, it's going to just buy 50%. From then on, we will know based on the market momentum if this is going to continue a step flag to the upside. You know why we said a step flag to the upside? Because we already know that this phase is an impulsive phase, and this area is supposed to form a corrective phase. And you understand the nature of a corrective phase could come as an enlarged flag, a step flag, a tight flag, depending. So with this expansion, if you go to higher time frame like 1 hour, daily time frame, you will see how strong this momentum was, right? So let me clear some of this so that you will understand. You will see how strong this breakout was on daily time frame. We break out from this channel, and then we already had this, internal breakout before. We have this big volume coming in. That shows us the market has changed direction. What do we expect? What is our criteria? We understand the phase and the theory, which is impulsive correction, impulsive. So if we have an impulsive leg, the next phase you want to look at to where is possible area we're going to have a retracement level coming in from. And obviously it was going to take out all of this high and get into this level. Until then, we were not expecting to sell off. So we sold off right here. And while we get to this area, which was about 50%, right? We had a bounce and we had a retracement, which was this candle, this bullish candle that is here, right here on the daily time frame. But notice something. Let me show you. So our price action was that if we get here like this equal candle on that 1 hour, this candle here, it was a very good bullish momentum to have given us an entry or a signal to continue buying up. So we would have still continued buying up. I did something like this last week, depending. So we take this out because this is the bullish and this is going to be a corrective phase. But depending on the volume that we have here, it will tell us whether we're going to go higher and go, or we're going to form, a certain price action. But also remember that I said that because of this double bottom that this guy has dropped here, that is not going to leave it behind. It's going to come back to take this double bottom before we go higher. So the probability was we can have a step flag upward ascending channel so that we can sell off again, retesting this high, or we can have a corrective nature forming, a bearish, forming a larger flag back into 61%, because at that point we were at 50% retracement using Fibonacci. We're at 50% retracement. This is where we were. Look at 50% retracement right here. So, and the higher probability on using a Fibonacci and a retracement level is to have 50 to 61%. 50 to 61% is higher probability that you will have a fine entry to the upside. So that will reduce your risks, and that would give you, a very good opportunity to trade with. So we did not trade 61%. And that was one of the reasons I said, okay, we haven't traded 61%, but we have traded 50%. And we have a very good volume coming in, like buys. But if it's not sustained, if that volume is not sustained, then we are clearly going to see us trade 61% before we think of buying. Why do we still think of buying it? Because where we are coming from is actually a bull market. We had a breakout, so we expect this correction to come in form of a flag, a bullish flag, before we can see it continue to the upside. So what is the probability entry level for us? Is going to be when we trade at least 50 to 61%, but we traded 50% and we drop a double bottom, and it's obvious that that double bottom has to come back to be taken out, and there was no real volume, sustainable momentum for the buyers here to go up. So that's why we started going down. So look at the entries that we took. First, we took this entry right here, we took this buy, and we exited here. Another one is last week we took a sell right here, and we were still holding that sell because I remember telling you guys that sell we are going to hold it for a longer term. I'm still holding my sell today. So after this video, I'm going to send you a screenshot of what my sales looking like. Let me even see if I can check that out to share. So I'm currently on one standard lot. I'm currently running 485. I will share. Let me share the screenshot on the group so that you guys can see. So like I said, I had already known what is going to be probable right here because of what price action is happening here. And you can see all of these are what? All of these are just no volume. It's just selling bit by bit. So I already knew that it was going to take us at least 2-3 days or 4 or more days before we can actually hit the target. What is my target? My target is 61%, right? That is my target. My target is 61% around this level. This is 62. So above this 62, we have 61, and which is heading to that level until it gets here, and then it gives me a very good volume back up, like taking this particular area out, breaking the structure right here. That's when I'm going to look for a retracement and a continuation to the buy side. Now look at this. Why do I still want to buy? Yeah, do we have a probability to go down? Of course, we do have a probability to go down, but what is the highest probability? The highest probability is because of the nature of the market that is presenting us. So you trade what you see, not really what you think. Yeah, we have a thought process where we think of where the market could go, the direction of the market, understand. But what do we actually do? We wait to see the market showing us where it's gonna go. Just like all of these areas that we traded, all of this area, how were we able to know that it's gonna buy here and probably sell off? Because we saw the volume, we saw the price action, we saw the consolidations, right? We saw the rejections. We know, because these patterns and these scenarios, they play out oftentimes. You just have to know what is probable and what is possible among these scenarios, right? So why do I still want to stay on the high probability side that the market, or bias that the market is still bullish? Because I understand the phase that I'm in the market, that this phase is what is a corrective phase. How far can that corrective phase goes? It can go as far as 50 to 61%. Right? So if I trade 60% right here, I'll be more comfortable, and not just trading the 50%, or sorry, the 60% or 61%. I need to see the volume on the direction of the market where it's going. So if it shows me the volume and then let me even show you an example. So at this price action level, you can see that there's a volume here on the sell side. Some people will call it an ending volume, where the market is just going down to take all the money, liquidity, and then now rejects. So you can do a fake out right here. From here, you can start pulling in, and before you know, it's closing bullish, right? And then start buying up. So that could be a fake out for some people. But I don't want to be caught in the right side of the market. I want to see him give me that rejection, give me that bullish nature, and then we can now engage on the buy side. So this is what I would rather expect, the market to come in and come back and give me something like this. And then I would likely want to buy. So as long as you're taking this low very much, these two lows that I was expecting it to take it out, now you're taking it out with the ending volume. So it doesn't just take it out like the first one. Look at the first one that it did. It came in and just take it out, start buying, and then start consolidating, and now selling off. This is the kind of volume I want to see him taking out strongly, and then it has to give me this equal volume back before I can look for a retracement in a lower time frame for an entry, and I'll start buying it. Now notice this. What I was saying on the other time when we talk about continuation patterns, right? So we trade a continuation or we trade a reversal. Now, this is clearly a bearish flag. One of the confirmation I saw before we took the other trades last week. It was let me delete this one. It was this bearish flag. Why is this picking? 1 minute. I don't know why this is not picking for me. Okay. So if you look at this, let me use these other tools. Okay, I'm offline. Crazy. Oh my God. How did this happen? Sorry guys, my network got disconnected. I want to be sure that we are in. Sorry if network, burns us out. Let me see how to reconnect my laptop so that I can show you guys what I'm doing. Okay, thank God we're back. Give me a minute. Let me share my screen back. Okay, so sorry, network took me out. All right. So I was trying to explain one of the scenario I had before taking the other cells or giving the signal for the other cell that we did had a sell off the other time. I want to believe you guys can still see my screen. So network has been really disturbing. Okay, so this is what I was trying to show you guys. God. 1 minute. All right, so now look at this. This was one of the price action for me to have a sell-off. Now you can understand we usually have a short-term and a longer-term price action, right? And we have structure inside structure, what we call patterns within patterns in this strategy, patterns within patterns. So now look at this. Look at this. So this was the sell-off. And I can consider this, remember when I talk about equal volume? Equal volume. So I could have, I had to consider this to be what? A very impulsive move. So we had this impulsive move right to this 50%. And guess what happened? We start having this structure, a bearish flag. A bearish flag, and what we call 90% rule. If you want to go and find out what we call a 90% rule, it states that when we have something like this, we're going to have a breakout to take out this level back to where the original move is. So look at this. This place became void. When we have this bearish flag, this is a push down. We have a push up, correction, a correction. So this became a flag. If you can see here, this is the pole and this is the flag. In other words, he has formed an head and shoulder, right? He has formed the head, left-hand side shoulder, and right-hand side shoulder. But since this is the current price action, yeah. So since this is a current price action, your right hand side is the more valid scenario that you want to see, right? So now this is the first impulsive. Now we have this flag as a continuation to this move, to this golden run move, right? So this became the void where we don't have anything stopping the market from coming down right here. All right, so sorry for that pause. You can clearly see that's one of those criteria. So we have the first touch, second touch, and third touch. You guys have not learned about these three touch yet. So first touch, second touch, and three touch. We also have first touch, second touch, three touch if you're using the trend line, right? So now we have these breakouts and we have a retest. So we expect this void 90% row to be completed, taking out these two lows and then getting us into 61%. So now this is pattern within pattern. You have to understand that pattern within pattern. So what else do we now expect? Because of this general move, so we're still going to have this, because of this bigger move, we still anticipate this price action to do what? To form this entire phase. This entire phase now, right here, to become what? To become our corrective phase. That's what we're expecting now. That entire phase is going to become our corrective phase for this market to be able to push higher. So this entirely phase is just a corrective phase and nothing more. Yes, we have lower time frame price action that gave us short-term opportunities, but entirely here we are looking at it as what? As a corrective phase, because we have a push up here. This same thing that is happening right here is what we are going to see on this other side now. If we put this up right here, so this is our impulsive move, and this is going to be our entirely corrective phase where we are now having this. And so we expect the market to do what? To break out here and give us this to become a bullish flag, and we go to the upside. So now look at this. This, we could expect something like that. And so we expect what? A bullish flag. Now look at this. We already have price action and we have a void on this other side. There's a void on this other side, and you can see how this is correcting steply. This is correcting steply. So the next thing we expect will be a bullish candle giving us a significant volume. And after giving us that significant volume, we know that we are going to what? We are going to the upside, right? So that is how I rate this price action. And we were able to get some trades from this. I think we took almost like three trades on this particular area, and all of them were all profitable. So let me take a question before I can go into Europe USD, and I can go into Europe USD and AUD USD. Remember, AUD USD we were on sell, and it's still selling. And on our last signal, we gave AUD, Europe USD, GBP USD for a sell-off. So, and we took profit on those. But what do we expect after that sell-off is what we want to look into. So let me know if you have a question there. I know internet is giving you guys some headache. If you have a question, you can kindly ask right now. Let's see. You have a question here on Europe dollars, which is Euro British pounds, sorry to say. Guys, any question? Let me show you the position I'm currently holding on this. The position I'm still holding up. Okay, so this is it. The Europe GBP. You know, we held it last week. It's still running. So you can check the chat box. You will see I'm still holding up this position that I told you. So I'm not holding the position because I just want to hold it. It's because I've seen the price action and I have a reason for holding it. As a matter of fact, now in a few minutes or maybe a few hours here, I'm going to, take the profit out, expect the market to give me the price action I'm expecting. This is very clean. Looking at this is very clean to give us what? To give us a bull.
Good morning, sir.
Right? Yeah, good morning.
And sir, my question is, please, what is the difference between this price action as an SMC?
Okay, so the difference between Price action strategy. Price action is literally a general name that you're looking at technical analysis. It's why we call price action. So in that means you look at different patterns, charts, what else? Volume, several things, liquidity, all of those put together. You form your strategy based on those criteria. So what that means is you're not trading the SMC model. You're not probably trading you're not trading what they call supply and demand model. You're not trading all of those, but what you're trading is what price is showing you. But then they have elements, they have likely similar criteria that you're looking at. Okay. To
yes,
trade
sir.
with. Yes. So do you understand, people? All the strategy, they have models, and I don't like all of those fair value curve things, order block. It gives me a lot of headache. So I know them, but it gives me a lot of headache because when you have too many confluences, your trading is not going to be clean. You're going to be confused. So you want to reduce as much as possible the noise of strategies, and just understand a model and price actions pattern. It could be a pattern. It could be a simple thing as head and shoulder, but you have to understand how it works, because if you're trading something like head and shoulder here, it has numerous patterns as to head and shoulder, how it forms. The approach of the left or the right shoulder, is it equal or this? Is it corrective? Is it impulsive? How it's approaching the areas of value for you could make a strategy. It make you understand when to enter, when not to enter, when it's valid and when it's not valid, and all of that. So what I trade the strategy called Falcon strategy. So I trade Falcon strategy, but that is my model. That is my way of looking at the market, the perspective looking at the market, which the strategy is based on the market theory, where we talk about the market cycle, the phases, the impulsive phase, the corrective phase, and that is simple. And while you're trading, either continuation or reversal within the market structure, and then you trade chart patterns, understanding the chart patterns and scenarios, different and the most valuable ones. So put all of those together, with the understanding of what market is doing, that makes up the strategy.
That makes price action. Okay, sir.
Yeah.
Thank you, sir.
All right, thank you. You're welcome. So, moving forward, guys, you can clearly see, for me, maybe in the next few days now, we're expecting to buy this market because this structure you're seeing here is corrective, and this entire phase is corrective. So what do we expect? A continuation on what? A continuation on the upside. Continuation on the upside. We'll clearly see a continuation on the upside on Europe GBP as soon as possible. The moment this is taken out, right? We're clearly going to see that. Here we have some of these lows that, we can have a continuation to the downside. But before we expect this, we expect this buy side to come up like this continuation. We want to see volume here. Once we see volume, that's when we're going to know if it's going to buy or not. Otherwise, we can see this break, like what is breaking right now, and it start giving us a continuation pattern. So we might likely maybe get to see a continuation flag, depending. If we see a continuation flag, that might work for us to sell continuation to this area. You can see we have some support and resistance level right here. So aside that, we want to see a buy area here. We want to see a buy volume, then we continue to buy. All right, so anyone, another person with questions? Otherwise, we are going to go to another page.
Hello, sir. My network. Na network. Hello, sir.
Hello, I can hear you.
Okay, sir. Na me again.
All right, so go ahead.
And I say this price action with the use of multiple time frames. Oh, now only 1 hour and 15 minutes.
No, you use multiple time frames. So for daily, 4 hours, 1 hour, depending on what you're seeing. Use
Okay.
multiple time frame.
Okay, sir. Thank you.
Now let me show you guys something on Europe USD. Yeah, Europe USD now, because we have that similar pattern, something similar like what we're seeing there that's gonna play out soon, right? So I also remember we forecast this Europe USD bullish. Now look at what I just described the other time. Now what I just described on Europe GBP. This is the same thing that happens here. So some of you might have thought that this market take this high. Look at the momentum; it's very bullish here, and it's now selling off. So this buy is very strong, which is maybe overbought areas, premium and all of that. Yes, it's selling off that, and all of this. Look at this sell that was here, and you probably will expect this to continue selling. If you had understood the price action where we traded this from right here, this buy, and each time you give us this correction phase, which is retracement, we still trade the buy side because it's still bullish. You want to trade the direction of the market. Now look at this too. This gave us a very good momentum, and this entire phase too, like what we circled here. I just opened this chart. It was what? It was a correction phase. Now what happened again? We had a very good bull run, and this entire phase too is the correction phase. So what do we want to expect? We want to see a continuation to the upside, but you have to understand that at some price level where we have support and resistance, you have to understand what pattern is forming. Like here, we can clearly see a head and shoulder here. And the same thing that happens on that Europe GBP that we're having a sell-off right now is also happening here. It's also happening here right now. So if you look at this, we are having this similar pattern, something like this, a bearish flag. So let's go back to Europe GBP. I don't know if I've cleared that chart up. I think I've cleared it off. But look at this. This is what happened. Let me see. Something similar like that. You can see the similarities, what is happening there. And guess what? We have a sell-off. We had this lows being taken out. Now look at Europe USD. So what do we see? We have this low right here. Look at this. This low right here. What I'm expecting is to have this sell continuation, taking out this low. And we can have a push up. And then we have a buy side for the volume to continue. So this void, there's a void here that this market has to fill in. So I will expect this market to sell into this area. And then if you can sell into this area and give me a push up volume on the buy side, then I'm going to do what? Buy. Because this entire phase here is a retracement, which is what? A corrective nature. But I have to understand the current price action. This is 1 hour time frame. What is happening here? We have equal volume here. So it bought, sold the same volume size, and then giving me a bearish flag. So what I would expect is that this bearish flag would do what? Give me a continuation to the side, because this is a sell volume. Sell, bearish flag, a continuation to where? To the most recent low, and filling up this void. And then we can now start having a pattern to show us that the market is going to be willing to go upside, even though this entire phase is a corrective phase. But you understand the current price action, what is happening, and where you're to be positioned to be on the vantage side of the market. So that's why we sold Europe USD the other day. And remember, I also said that we're going to hold that Europe USD for a longer time, because I also see that, you know, we have this. We saw Euro USD last week. It was the same pattern that we saw. The same thing happened with AUD USD. AUD USD and GBP USD. Let me see if I have AUD. I want to show you guys AUD clearly as well. So AUD USD is not that clean. It's not clean at all. AUD is not clean because it looks that it doesn't have volume both on the buy side and on the sell side. So what is clean is Europe GBP, Europe USD, and then that GBP USD. Those are clean, but for this AUD USD, they are positive correlative pay. So it's likely going to perform what GBP USD and AUD USD is performing. Sorry guys, I lost my internet connection. The network here is really poor. So I lost my internet connection. The network here is very poor. I want to believe in the okay, so because of internet connection, I think we may not continue from here again, but we will drop focus, and we will drop more of the analysis later on. Probably we'll drop this video if it's good enough because of the network break and all of that. So guys, we would like to end the session here today. If you have any questions, you can write us on the community and on the groups and all of that. We'll be attending to that for now. Thank you. I know most of you have lost the connection at this point, so we'll continue in our next section.